So it is going super well for Tesla stock again, being up more than 22% from recent lows. And since we talked about a few other EV companies like Lucid Motors recently, we now have to also take a look at the biggest one in the game, rocking one of the best performing stocks of last year as well. But after the recent recoveries of almost 40%, it seems like the stock is going up again. So what we are going to do today is give you an insight into what is actually happening to Tesla's stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Really quick before we start, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button, it's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock, and in the case of Tesla, we have to take a look at two very important aspects. On the one hand, we have the best and one of the biggest EV maker in the world with promising upside in solar and energy storage. But there's also a ton of new competition entering the electric vehicle space in 2022. We also have to talk about the massive opportunities it currently sees in China and some crucial fundamentals of the company. So first, there's a lot of competition to be expected in the future with literally every legacy automaker transitioning to an EV-heavier lineup. But while there are certainly risks to Tesla, particularly given the mentioned challenges for automakers lately as they continue to fight through supply chain disruptions caused by the pandemic and the specter of rising inflation, based on recent statistics, however, it's highly unlikely Tesla is going to fall apart anytime soon. No stock goes up forever in a straight line, but the long-term uptrend for shares coupled with a few objectively impressive numbers explains why investors' optimism rises again. And, as this is also crucial to consider, before we can come to a prediction at the end of the video, taking a look at some key statistics, it also looks promising for Tesla. Right now, it has a market capitalization of about $600 billion, more than the entirety of its top competitors combined. In fact, thanks to its inclusion in the S&P 500 index in December, it's one of the 10 largest stocks in this leading index. Outside of market cap, however, considering their massive facilities as well as cash on their books, the competitors sometimes have a big advantage. But both news about the company and his CEO, Elon Musk, are of significant market interest. Tesla announced first quarter metrics in late April, with revenue being almost $11 billion. Net income of $438 million translated into earnings of 93 cents per share. And as management said, Tesla achieved its highest ever vehicle production and deliveries. This was in spite of multiple challenges, including seasonality, supply chain instability and the transition to the new Model S and Model X. So, and this is also very important for our prediction later on, over the past year the car manufacturer has been increasing its production capacity, in part helped by the new factory in Shanghai, China. According to the second quarter report on vehicle production and deliveries, Tesla produced 206,421 cars and delivered 201,250. These numbers are strong enough to justify the relatively high valuation levels for the shares. And looking forward, Tesla actually has some really aggressive growth plans, noting that it intends to expand deliveries by over 50% each year over a multi-year horizon. The company's upcoming production facilities in Berlin and Texas, which are likely to open in late 2021 or in early 2022, and the introduction of its new pickup, the Cybertruck, will be key to its near-term growth plans. The timely completion of these facilities and a swift production ramp of new vehicles could give investors confidence that Tesla is on track to meet its lofty targets. So as the stock is still relatively cheap and not at its recent highs again, it would make sense to buy more shares right now. It is more than likely that the long-term rally continues and prices will go up again. Alright, with that being it for today's video, thank you very much for watching. If you liked this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.